Hi traders, you are welcome back to the Forex Geek channel. In this video, we're just going to be diving into a powerful tool that can give you serious insights into market sentiment, and that is none other than the Fear and Greed Index. All right, so if you have ever wondered why the market moves irrationally or how to gauge whether traders are feeling overly greedy or fearful, then this video is for you. Okay, I'm going to explain what the Fear and Greed Index is, how it is calculated, and how you can use it to avoid emotional trading mistakes and improve your strategy. All right, so stick around because this knowledge could completely change the way you look at the markets. Before we dive in, make sure to hit the like button, subscribe to the channel, and turn on notifications so you never miss out on powerful trading insights. Okay, now let us get started. Let us start with the basics. All right, what exactly is the Fear and Greed Index? Now, simply put, the Fear and Greed Index is an indicator that measures overall market sentiment by analyzing different data points. It gives a score between 0 and 100. All right, it gives a score between 0 and 100. Now, from 0 to about 49, from the 0 to 49 price data, rather the 0 to 49 data point represents fear. All right, when the value is between 0 to 39, about 39, right, it represents fear, meaning that traders are cautious. There could be some sell-offs during that period, panic selling and all of that. Then when the value is between 40 to about 49, it's a neutral period, right? During that time, there is some level of uncertainty, right? There's some level of uncertainty, and you could still see some sort of dips. Yeah, the price, or rather the price of the assets, could experience some declines because there is still uncertainty. Neutral rather, no significant rallies, and all of that is just a neutral standpoint. Then when you have about 50, all right, okay, when you have about you can see, let's just look at this this chart around here. You can see that we have, based on coin market cap data, okay, as you can see right here, I'm using the coin market cap data to explain this, right? So if you have the from 0, let's just start from, let's be more detailed, because we can just generalize the categories into fear, neutral, and greed. All right, we can categorize it into fear, neutral, and greed, and the neutral could be reaching up to 59, right, as we can see here. Okay, 59. Okay, some sources might say 49, right? Some sources might say that greed starts from 50 to 100. All right, but let us just break it down even further. We can see that from 0 to 20 is extreme fear, right? Extreme fear. Then from 20, or rather 21, right? From 21 to 40, we are having fear. During those periods, both during extreme fear and fear, there are sell-offs, right? Although the sell-offs are even more severe during the time of extreme fear, all right? Then we have the neutral, which is starting from about 41 to 60. Okay, during that period, you might see some uncertainty in the market, all right? Then from 50, or rather from 61 to 100 represents greed, meaning that traders are aggressively buying. But from 61 to about 80 is just the normal greed, while from 81 to 100 is now extreme greed, where you could see serious price rallies. All right. So a rhythm of extreme fear could indicate that the market is oversold, while extreme greed could mean that the market is overbought and due for a correction. Understanding this balance can help you make smarter trading decisions rather than blindly following the crowd. Now that we know what it is, let us talk about how it is calculated. Okay, the fear and greed index takes multiple factors into account to determine market sentiment, including volatility, which is a sudden rise in market volatility and can signal fear. All right, and then we have the market momentum and volume, which is strong buying pressure that can indicate greed, while heavy selling pressure can suggest fear. All right, that's in the aspect of market momentum and volume. Okay, so note that strong buying pressure can indicate greed, while heavy selling pressure can indicate fear. Okay, so these are like some of the factors that is taken into consideration when the fear and greed index is being calculated. Then we have the put/call ratios. Okay, a high put option ratio might show fear, while a high call option ratio may indicate greed. All right. Then we also have safe haven demand. Okay, so this one now is going beyond crypto. Now I'm going beyond cryptocurrencies, okay, because this CMC, as you can see, the CMC is mostly talking about cryptocurrencies, okay, but from the general the general concept, or rather from the wider financial markets view, right, from the wider financial markets view, considering other assets, right, including options and currency pairs and bonds and all of that. When talking about safe haven demand, if traders are moving into safe assets like gold or bonds, it often signals fear in the market. All right. Okay, now talking about social media and news sentiment, it's important to note that market reactions to news, tweets, and global events also play a role in determining sentiment. So, by analyzing all these factors, the fear and greed index provides a comprehensive snapshot of whether traders are feeling anxious or overly confident. Now, let us talk about the most important part. How can you use the fear and greed index in your trading strategy? First of all, you can use it to identify market extremes, okay? If the index is in extreme fear territory, which is below 20, the market could be oversold, meaning a potential buying opportunity is coming. Then if it is in extreme greed territory, which is above 80, the market could be overbought, signaling a possible reversal or correction. All right. Then now you can also use this index to confirm trade setups. Okay. Before entering a trade, you can check the fear and greed index. If you see an uptrend, but the index is at extreme greed, you might want to be cautious as a pullback could be near. Okay. Then if you see a downtrend, but the index is at extreme fear, it could be an opportunity to enter before a recovery. All right. Now, it can also help you to avoid emotional trading. Many traders fall into the trap of buying when prices are skyrocketing and selling in panic when the market crashes. By using the fear and greed index, you can step back, analyze sentiment, and avoid making impulsive decisions. All right. Now, a pro tip: the fear and greed index works best when combined with technical indicators. All right. It's not very nice, or rather, it's not very advisable to rely on the fear and greed index alone. Okay, so you can use technical indicators as additional, confirmation tools. All right, technical indicators like the moving averages, RSI, and all of them, right? Just to get, additional confirmations from the technical perspective. Okay, so there you have it. The fear and greed index is a simple yet powerful tool that helps you understand market sentiment, avoid emotional trading, and identify potential reversals before they happen. If you found this video helpful, don't forget to smash that like button, subscribe to the channel, and turn on notifications so you never miss out on more expert trading strategies. And I want to hear from you. Drop a comment below. Do you use the fear and greed index in your trading? How has it helped you make better decisions. Okay, I want to hear your thoughts. Thank you for watching, and I hope to see you in the next video. Happy trading.